Evening going to be on the or okay.
Welcome, everybody. We are going to wait 2 more minutes in order to see if more people is joining us. Well, let's kick off. Welcome, everybody. Thank you for joining us. My name is Ariel Bocio, Vice President of the Argentina-Texas Chamber of Commerce, and I will be the moderator of this webinar. The Argentina-Texas Chamber of Commerce is a volunteer, independent, non-profit organization. Our mission is to promote investment, trade, and business opportunities between Texas and Argentina. We help companies to generate leads and business and expand their networks. We invite you to join us, the Chamber, and our Energy Committee that has 70 members. Our webinar today is the future of the oil and gas exploration and production sector in Latin America. It is a pleasure to have Andrés Armijos today with us. Let me introduce Andrés. Andrés Armijo is an energy professional with over 15 years of experience in the management consulting, E&P, and oilfield services industries, all focused on Latin America. Based in Houston, Texas, he has extensive knowledge of the region and has worked with NOCs, IOCs, and OFS companies in areas including strategic planning, forecasting, negotiation strategy, energy policy analysis, and economic financial modeling. In his last role, he led the strategic planning group at Halliburton Asset under finance service contract in Ecuador, as well as supporting new ventures across Latin America. We want to thank our sponsors. Pan American Energy, ProShale, Practia, and MHR Latam. Also, we want to say thanks to our friends in the Brazil-Texas Chamber of Commerce and the US-Mexico Chamber of Commerce. Just in order to give you some how we are going to organize the webinar, first, Andres is going to present, and after the presentation, we will have a question and answer sections. You can post your question in the Q&A section in Zoom, and in that section, we are going to read your question from there, and Andres is going to respond them. So thank you very much for being here, and let's enjoy this presentation. Thank you, Andres.
Thank you so much, Ariel. Thank you for that introduction. You guys. Well, thank you. Again, the topic of this presentation is, or this panel discussion is the future of oil and gas sector in Latin America. It's a very broad topic, so I think what from my experience, it's better that we think about it in themes. So I'll detail it a little bit in a couple minutes. First of all, I want to describe what Welligence is, who we work for, who I work for. Well, we're a research data analytics firm in which we cover Latin America, Gulf of Mexico, expanding Africa, North Sea, Middle East, and that's what we're progressively going to cover the rest of the world. And we're really focused on providing the best analysis and data for with the greatest cadence of our different assets. So we combine data analytics with machine learning. We have a data science team within our groups, and obviously industry experience from the different folks that we have within team to provide asset analysis, asset evaluation information for proper decision making for the different acquisitions or operational excellence or benchmarking that you may want to do within a country. So just want to give highlights of what Welligence is. Going into what the topic of this presentation. So what we think about, we wanted to focus on some of the key themes that we are seeing within Latin America. Obviously, these will relate to each one of the countries that we mentioned within our scope, being Brazil, Argentina, Colombia, Mexico, Guyana. The reality is that all these, in some way or another, have to do with these main themes that we're seeing within Latin America, and in some cases, the general E&P space globally. So some of the topics, and I'm going to try to highlight. So one of them is capital discipline. I think there's a big change in how the thought process or how people think about in terms of not only thinking about maximizing production, but actually thinking about what the value generation is about. So that's one of the topics that I'll describe. The second topic, which is more specific to that we see in Latin America, is really the takeoff of offshore production growth activity that we're seeing in many of the areas. And what does that mean in context of growth opportunities for, let's say, a service company versus a potential for other operators that may be looking for M&A acquisitions. The next topic is the topic of unconventionals and Vaca Muerta in Argentina. So we're seeing good results, but what does that mean in context of the next stage, or how do they continue growing in terms of Argentina? As well as some other countries that, maybe they're exploring unconventionals as well. And the next topic, obviously something that's been really a hot topic over the last year and a half or so. Really, what does that mean in terms of the energy transition, right? It's here. What does it mean? What's its impact in terms of the region and some of the players within the region? So we'll delve into the first scene, which is the capital discipline topic. Over the last several years, we're seeing, the very high volatility in terms of prices, the uncertainty in terms of demand forecasts for oil and gas. So there's really put a lot of pressure in terms of the E&P space. So before, I think in years past, the discussion really was about, well, governments or NOCs really talked about, well, I produce X, so that means that I generate that much amount of revenue. But the reality is that it's a much more difficult market, the one in which we're all working in. NOCs, in many cases, are focused on really high grading their portfolios, being really focused on what they do well and what they do well to maximize returns in the best possible way to their investors or their stakeholders. That is from one side of things, but also, you know, we're seeing IOC is really focused in similar fashion. You know, they're seeing, yeah, there's the need to focus on returns or for the investors, but given this situation of focusing on asset returns for some of the major NOCs as well as IOCs, really provides in some ways opportunities as well for many people within the space, right? I highlight some of the Petrobras example of what they've been doing over the last several years of really focusing their portfolio on pre-salt assets offshore Brazil, and they've gone through this divestment process over the last several years, getting rid of many of their downstream, midstream, and some of their non-core upstream assets as well. And this has really provided, it has really changed the dynamics, for example, in Brazil, right? Like you've seen completely new players come into the world. You're seeing the rise of Brazilian independence over the last several years, the new onshore space that used to be a place that really Petrobras dominated, but had really no interest in investing over the last decade or 2 decades or so. You're seeing really be the focus of much of many M&A activity and many of these acquisitions that are happening within Brazil itself. So you're seeing new independents that now compete in terms of production and growth and capitalization versus other ones that were focused on Argentina or Colombia primarily, right? So really see that focus and that growth, and that really kind of creates opportunities for many players from a service standpoint, be much more dynamic, much more investment for growth, et cetera. So that's what we're really seeing from a Brazil standpoint. And, you know, and also in other countries, we're seeing, you know, in Colombia, you're seeing Ecopetrol really focused on what is their core assets or focusing what their strategy is. So again, this in many ways provides opportunities for other players to come and enter and buy these assets that maybe, you know, it creates like a secondary market for these assets and different players to still create value from these opportunities. So, but in essence, we're seeing that thought process or that strategy of really being focused on capital discipline for some of the majors and IOCs or NOCs creates an opportunity for other players to come in and really create a more dynamic market and more players to come into these places. So that's one of the key themes that we're seeing. The second theme I want to focus on is really the offshore production growth, right? Right now, you see, you know, the successes coming in from Brazil offshore exploration, the Guyana exploration that's coming into play, and really they're becoming one of the major players or the major player in Latin America, right? Brazil is just production growth is gonna, we're seeing it's gonna really go increase substantially in terms of its makeup, in terms of the share of production totals in Latin America. And you're seeing some diminishing in terms of importance in some other countries, but at the same time, you're seeing a continued pace of production. But you also see the entrance of new players, right? Guyana, Suriname, that really were not necessarily not big players in the oil and gas space, but given their very successful discoveries in some of their offshore assets, they're gonna start producing up to 1 million barrels by the end of this decade. So you're seeing that resurgence and new players, again, new markets, countries that were not necessarily part of the space, need support, need new development. This creates opportunities for maybe power generation, for pipeline constructions, for other type of FPSO investments or service companies. So you're really seeing that creation of new markets. You're also seeing, again, associated to the capital discipline side, you're seeing that because of the focus on these offshore assets, because of productivity, it creates opportunities that, and the need for capital for, obviously these offshore assets require a lot more capital, are much more capital intensive in that sense to be able to invest, which means that they need to be more focused, some of the companies that are in those spaces, which creates, again, an opportunity for M&A opportunities where companies can take over some of the non-core assets that they're going to sell off, right? So again, it's a common theme that we're seeing. It's companies focused on different markets. One other piece I think here that's clear is, IOCs are very focused on some of these core assets, and we'll delve a little bit more into this about how we're seeing the impacts of greenhouse gas emissions and the focus on energy transition. How some IOCs, yes, they're focusing on offshore assets because of their in general they're less carbon emitting than some of the assets in general, right? So you're seeing that happen as well. So it creates opportunities for many assets to be up for grabs in terms of the market, right? The third piece that we want to focus on is the unconventional side, where in particular Argentina, you see, on an operational standpoint, we're seeing that Argentina really is growing quite well and doing quite well in terms of its operational efficiency, becoming kind of leapfrogging some of the processes or the growth or efficiencies that they would having in the United States, for example. They're applying more technology. They're having longer laterals. They're having having much more finding that proper efficiency, or what is the most optimal design for a completion. So you're seeing that really relate to some of the productivity that you're seeing from some of these assets, right? So that's something core, obviously, that that will continue. We're still seeing that continuing in some of the players in the Vaca Muerta, but you're also seeing that as unconventionals are growing, unconventional production is also going down in terms of Argentina. So you're seeing almost like that's being compensated in terms of production for Argentina in terms as a whole. So there's always that talk of a very large potential that may exist in Argentina, and there is, but there's always these I think there's these barriers in general for Argentina in terms of its development that we're seeing for future production growth in Argentina. So that means that we're seeing some macroeconomic conditions that controls on capital inflows and outflows, which limit some of the investments that we're thinking from outside sources. We're seeing that kind of situation forces many players within the space to really try to find new creative ways to finance some of their operations. There's a lot of companies that have a lot of stranded, in a way we call it stranded capital within country that can't take out. So they're trying to figure out how to put it to work in some ways and put it to work into investing in keep it rolling in terms of more investments in the country. But at the end of the day, it's kind of limited what we're seeing in terms of inflows or greater growth, even though there's still huge potential in Argentina. You're seeing, for example, I think there was the Trafigura Vista Oil transaction that was a kind of a creative way to finance some of their operations. You're seeing a lot of raising of capital within local markets as well. And what they're trying to do is really raise capital for all those activities, and but also trying to mitigate some of the currency risk that they may have within countries. So there's all those macroeconomic conditions create this level of uncertainty, I think, in general. So that limits some of the, for example, potential growth in some of the productivity or the production in the Vaca Muerta, which that is associated to other types of investments that are required, for example, on the infrastructure side. So there's always a constant talk about Argentina requiring more infrastructure to be able to take more product to market, and also to mitigate certain situations from a seasonal standpoint, right? From that you're seeing in Argentina, you know, that the government's trying to instill some type of incentives to be able to produce more gas in moments where they require gas, but at the end of the day, they're still not producing all the gas that they're required to produce to be able to that they demand in the winter months, and that means that they still are importing gas, right? They're still importing LNG at a significant price that we're seeing, you know, for LNG prices, spot prices skyrocket as a whole. So I think, you know, we think in general that the macroeconomic conditions, some of the limitations in infrastructure are some of the, you know, they go hand in hand, right? Because you need one for the other to kind of, people need to feel like if they do an investment in infrastructure, there's going to be need to be reassured that their investment, they're going to be able to recover their investment. So we're seeing that the government, you know, yesterday they published or they presented some of their plan for promotion for hydrocarbons, which is, you know, it's a step in the right direction. They're trying to create, you know, from tax incentives to potential to be able to export some of the production, to be able to bring in some fresh, you know, currency into the country in terms of dollars. But at the end of the day, if you look at the whole process, it's very bureaucratic. It's a difficult situation, and in terms of managing, and in some ways that, you know, that is difficult for some, and it creates a barrier, let's say, for some entrants, but it also creates opportunities for others, right? I think people or companies or players in general who are comfortable to kind of work within that environment, to be able to manage that uncertainty, and are used to be able to manage, you know, issues with the government, you know, policies, et cetera, as well as maybe worker unions, et cetera. All those type of issues are really the ones that we're seeing are being successful, right? And recently we covered one of the transactions that happened within Argentina that, you know, was CGC bought Sinopec's Argentina portfolio within country, you know, and Sinopec really had just, you know, stopped investing in the country. And I think for many reasons it's because of the uncertainty that we're seeing and some of the issues that we're seeing from operating in country. But CGC came in and bought those assets at what we would, you know, in terms of a dollar per barrel BOE basis, a pretty attractive rate. So we're seeing some people take advantage of the situations, and mostly local players who are really, you know, consolidating, becoming bigger independent players within that space, right? So we're seeing more and more of that, and those players who can thrive in those positions can potentially see opportunities in that. And obviously we're seeing that, you know, with time, I think some of those incentives that are put in place will provide greater potential for more for services, for, you know, for all the frac equipment that are needed, all the sand equipment, and all the different services that are associated to the growth in terms of the Vaca Muerta. But that being said, some of the, you know, that growth that's happening in unconventionals, it also, you know, it creates some potential opportunities again for, since people are focused on unconventionals and really are reassigning or high grading, as we call it, their portfolios from conventionals to unconventionals. We're seeing a lot of assets or in other parts of the country that still has potential that maybe just be underinvested. So that's where the unconventional side come into play, and we see players still acquire those assets and see a lot of potential still in those assets for oil and for gas as well. So again, it's kind of a mixed bag in terms of unconventional. We see the potential, we see that it can grow, but it has its barriers and its challenges within country, that some players may be able to successfully navigate that, but some others may not. So I think, and then just kind of putting all these things together, we kind of put it into the whole energy transition space, right? So a lot of players we're seeing, you know, there's a lot of pressure from investors, from governments in some cases, to really for E&P companies to have a thought on what does it mean to be pressured into this whole energy transition space, and how that translates to many players that we see is that, you know, they're focusing their portfolios or readjusting their operations for more of a energy intensity or carbon intensity reduction, right? So we see a lot of players, as you can tell on the left-hand side, players kind of set certain targets for themselves in terms of what their percentage reductions will be. So we're seeing, you know, Ecopetrol, a lot of players, we're seeing a lot of focus on Colombia, not necessarily from a regulatory standpoint, but the actual players themselves, like the NOC, Ecopetrol, some other independents that we see, Parex, Geopark, Gran Tierra, et cetera, to kind of setting some targets for themselves about what it means in terms of setting reduction targets. So we're seeing a lot of that happening in Colombia, and there, you know, and that translates to also some, you know, again, refocus of certain objectives, right? In some cases, we're seeing instead of focusing on looking for crude, they're looking more for gas assets and looking for how they can take that gas to market. So we're seeing focus on in Colombia, particularly, obviously Colombia, Argentina, Brazil, the focus on, there's a lot of emphasis on how to grow the gas side of things and how to, you know, create more power generation based on gas, or from a standpoint of reliability issue, there's a need for more gas infrastructure, gas supply, because that's something that's being seen as a requirement, right? From a Brazil standpoint, we're seeing that yes, they have very large capacity for hydro and other renewables, but we're seeing also it's how frail it can be if they don't have other reliable supply of other power generation. So again, and similar to what we saw in Argentina, they're requiring to import a large amounts of LNG still, even though they have pretty large amounts of gas in country, but it's just not not able to be taken to market. So we're seeing that, you know, they're trying to instill a lot of from their gas law to kind of stimulate some of that growth from a gas standpoint to build infrastructure for power generation, to instead of re-injecting or flaring or anything, they're really to monetize that and create a dynamic market for gas in country so that the country itself doesn't have to import LNG. We're seeing, you know, in Colombia, same thing. They're really focusing, or some Ecopetrol or some of the other kind of NOC based companies to really focus their portfolios on searching for gas in country for the demand that they're seeing. And we're seeing some offshore exploration also from Shell, but maybe looking for some gas assets as well. That being said, you know, we're seeing that in general is where they're focusing in terms of gasification. Some of the limitations that we're seeing also, you know, or what kind of pressures people are seeing is because of this focus on energy transition, we're seeing that companies are being forced to, you know, rethink what kind of assets to target. So we're seeing certain players that, based on the funding that they have, whoever supports them or whoever's funding them, that they're being limited on how they can invest. They cannot look for oil-based assets anymore. They can only focus on gas assets, for example, and that creates a limitation for in that piece. We're also seeing that a lot of the multilateral banks in general for any type of investments for IOCs or NOCs, et cetera, that they're saying, you know, you can invest, you can borrow from us, or we can lend you money, but the money that we're providing cannot go to oil specific projects. And that creates like these kind of situations in where, okay, for example, I'm going to use an example of an NOC, right? So maybe in the past they could have leveraged some of that financing to develop some of their, you know, their assets, but now, given this limitation, they're being forced in a way to rethink how they're going to develop the oil and gas industry that they have. So we're seeing, you know, in some cases they're being forced to, okay, we really need to rethink about our portfolio and how we're going to invest in this portfolio. So that forces them to maybe, you know, divest some of their assets because they're not able to support that investment anymore, and somebody else can do it from, you know, from a purely financial point of view. So we're seeing that, you know, happening already in some countries. Like I would say, you know, Ecuador is one of them. For example, the new government came into play. They're really focusing on bringing investment into the country, but it's also twofold. I think it's, yes, they have a government that's clear on bringing more investment, but they're also, I think, in some respects, clear that many multilaterals or much of the funding that they could have potentially gathered for this type of investments is limited because of the issues that I just outlined in terms of limited focus of where those investments may go. And you also now start seeing, you know, majors also, and similar to what I discussed before, some of the majors are being pressured from their stakeholders, their investors, to really, you know, have these type of metrics in mind and have, okay, well, what's my impact on in terms of emissions, et cetera. So you start seeing a lot of companies really divest their assets where they're really focusing on their lowest emitting, highest value, right? So that means that, for example, an Ecuador, for example, has divested from many assets that they went from having, I think, activities in almost 30 countries to now they're really focusing only 15, because they want their footprint to be very, very focalized and on assets that are core to them. And then again, that, you know, that creates, yeah, this situation in which majors are leaving, but who are they leaving these assets to? It creates opportunities for players that maybe, you know, don't have some of those requirements or pressures from investors. So we're seeing that's one of the aspects that's happening. Another aspect that we're seeing is more diverse terms of investment. So here on the right, we're kind of highlighting that some of the you know, NOCs or IOCs are investing in other forms of energy that are you know, they're not now only focused on E&P, but they're also focused on other forms of energy, so solar, wind, et cetera, right? And in many cases, we're seeing a way for these companies' assets to reduce emissions is to find ways to, for example, power their operations through renewable sources. So, for example, we're seeing Parex using geothermal power to power some of their operations and some of their assets. You know, that you're really seeing a lot of different aspects and focuses of the different companies into these diversification, really, into different technologies within the region itself. But yeah, I really think that, you know, some of the limitations in terms of capital, the refocus on carbon emissions is really changing the dynamics in general overall in Latin America, and obviously the globe. You know, this will have impacts on ramifications in general of how we're seeing things. And in many ways, this also forces people to rethink, you know, and all these elements combined, I think, you know, we're seeing a lot of players really, you know, not necessarily focus on the exploration or frontier exploration, for example. They're really focusing on, okay, well, how do you have an accelerated return, right? So it's like they're thinking short cycle type investments. So how do we grow, you know, how do we limit negative exposure in terms of investments? How do we recover our investments quickly? How do we grow without necessarily putting ourselves into too big of a hole, and also not thinking too long term in essence for returns to happen, right? So even this impacts how people are developing their assets, because, you know, beforehand you would have seen many companies really take a long time from exploration to appraisal to FID to et cetera, you know, a decade or so. And really companies are trying to think of how to accelerate that time and not being necessarily exposed to much of the volatility that we're seeing in the market, as well as, you know, potentially some of the pressures that people are seeing in terms of demand. So those are many of the aspects that we're seeing in terms of from a standpoint of energy transition and how it's impacting portfolios, right? And in general, we're seeing all these global shifts, and this is just kind of highlighting some of the opportunities that we're seeing within the region of Latin America or the Americas in general. We're seeing all these driving shifts in terms of capital discipline, the growth of growth on offshore and the focus on offshore, the issue, the focus on unconventionals and some of the what does that mean in terms of in-country as well as portfolio management, et cetera, and also competition for capital within the countries. We're seeing all those impacts provide opportunities in terms of operators to potentially buy assets, and we're seeing that happening. It's for a much more dynamic market at the end of the day, where instead of being a single player in Brazil, Petrobras, who just dominated everything, really seeing that market being fragmented into different holes and different players, which creates much more opportunities for people to come in and maybe even local players to participate, on the onshore side, for example. We're seeing new markets actually develop in other places like Guyana, Suriname. And, at the end of the day, we think that all these different themes that are happening within, and I'll go back to some of the summary of the themes. All these themes really have, are interconnected at the end of the day, that create for the opportunity creation in the short, medium term, and and obviously the long term for many players. And I think at the end of the day, everything that's going on contextually within the market for energy transition, I think at the end of the day we'll see how demand plays out and how some players really see opportunities within this space in general. So I think I want to highlight those type of issues high level for all of us. If I don't know if you guys, that's what I wanted to focus on the conversation. I want to open up the panel to some questions that you may have. That's what I had to present, and if there are specific questions, I'd love to cover them.
Thank you very much, Andres. It was a great presentation. You covered everything that is going on in Latin America. And I think that you gave us a lot of insight from different perspectives, not only regarding the exploration and production, but also regarding renewables, regarding the energy transition, and so many other topics that are part of the discussion today in oil and gas. So we start to receive some questions from the audience. We will start with Patrick. The question is, how do you see regulatory changes into emission evolving?
That's a great question. And, it's something we follow regularly, and we speak to, and just to give you context, right? So given the areas that we cover and the companies who we talk to, our clients are banks or oil and gas companies and service companies, et cetera. We're seeing that's always the question, right? So how do regulators, are the pressure coming from players, et cetera? And we're seeing twofold, right? One, when I highlighted that it may be individual companies are taking actions, or that regulators are actually pressuring some of the players. What we're seeing in many cases, for example, in the Gulf of Mexico and here in the United States, we're seeing players really, we don't see necessarily pressure right now, but investors are really creating that pressure, right? So there's this sense that it's almost being within itself, right? They see that they need to be able to one, provide proper information, clear information about what their emissions are, et cetera. So they're kind of trying to get ahead of the curve in that sense of how they're providing their investors or even regulators information of what their impact is in terms of carbon emissions. We're seeing all those pressures coming from Europe into the United States, and that really kind of seeing that once companies are adopting those type of principles, that will kind of flow down into what's happening for companies also in Latin America. And we're seeing more regulators asking about those questions. When we talk to them, it's like, oh, well, we're going to start asking them to submit information about flaring and re-injection and venting information. Talk about power consumption as well. So these are things that are in some countries are already requirements, and they provide the information. In some other ones, it's still like in its infancy, right? That they're necessarily pushing that out to as a requirement for them. But what we're seeing is that players themselves are self-reporting in some ways, and because they're feeling that pressure. In some cases, for example, that we know in Colombia, many players have, Parex, for example, have a clear sustainability team. They have a sustainability report that they update on a regular basis. If you go to their website, they have all kinds of super detailed information about their missions, what their targets are. So it's almost like they're being self-policed, right? The regulators, when we ask regulators, yes, they're intended to provide some information, but the focus, it's not necessarily on that right now. So that's what I said, that I think that in Latin America, the pressure, they have other competing themes, I think. I think in Latin America, there's much more pressure from, there's other priorities, let's say, right? And I think that it's more of for example, a power reliability issue, right? So I think not necessarily on an emissions standpoint per se, but it's kind of being driven towards that, as natural gas is thought of as like a transition or a bridge into lower emissions, right? So we're seeing some of that kind of discussion play out a little bit, but really, in terms of being forced to certain emission standards, et cetera, we're seeing, first it's happening in Europe, United States, and it's kind of flowing down into other countries. And then you're seeing companies really just self-police. So from that standpoint, I hope I answered that question in a way that, yeah, regulators are seeing it, but we're not necessarily seeing that they're going to necessarily pressure or force, or not hearing it, let's say, force companies to do so. There may be just of a self-police type of thing.
Thanks, Andres. We have a question from Pablo Rueda. Which countries in Latin America have the potential to enter the global LNG market as exporters?
Well, absolutely. I mean, that's a great question. I think from some of the graphics that we saw, right? I'll showcase some of this piece. It'll show it from a supply side, and you would have to show demand, right? But I think this showcases, Brazil and Guyana and Suriname really, we're talking, this gap here is almost 5 million barrels that they're going to be producing. Just almost more than 50% of the production coming in 2025. They're going to be, absolutely net exporters of product, right? I think that's what you're going to see them as being major exporters, major growth. Given that yes, Brazil has a lot of internal consumption, but the reality is that given the size of their production base and growth, they're going to be a substantial net exporter. Guyana, Suriname, obviously, they're small populations, but again, they're going to be huge net exporters of crude and in general for the foreseeable future. So I think from those standpoints, in terms of crude, right? I think the gas story is always a complicated one because it's you need a creation of markets, et cetera, and we're seeing that in many cases. Brazil has tons of gas potential, and gas. They re-inject a significant amount of gas already in some of their pre-salt fields, et cetera. So once that comes into, they're able to, they're investing in terms of infrastructure to be able to connect to markets, and then potentially that creates a market for also LNG. It just whenever they don't need it. So. And same thing with Argentina. Argentina has a huge potential, but as I mentioned before, it's always a chicken and the egg, right? It's do the market dynamics within Argentina allow it to investors feel comfortable enough to do investments in that country? So and then henceforth increase production. So all those things are interconnected at the end of the day. So I think in general, I see, Brazil and really and Guyana, Suriname as being, huge net exporters in the foreseeable future.
Thank you, Andres. Another question from Patrick. How do you see the macroeconomic impacting growth in Colombia and Ecuador? Is the political climate a limiting factor in either place?
Good question. I have pretty close ties to what I see in Ecuador, in particularly. I think the government has tried to take some. I'll start at Ecuador and then I'll go with Colombia. The government that just came into power with Lasso in May of this year has really started, with a pretty ambitious plan to change. They published a presidential decree. It's called Decreto 95, which really outlines what they want to do with the hydrocarbon space, which in reality is a pretty ambitious undertaking to change the legal framework and contractual availability of the country. So, as many of you may know, many of the contracts that exist in Ecuador currently are service type contracts, and what they want to do is potentially migrate those contracts to be more participation based, more PSC based, and potentially have more operators, more private investment in the country, and in that way spur growth, right? So those macroeconomic conditions create, at least ambitions are, lay the groundwork for potential growth within the country. So yes, the ambitions are there. Obviously, what I've seen over the last several months is they continue, working on how to get to those objectives. So a lot of times intentions and reality are very much different. So we're seeing that they're still struggling to kind of come up with what those. We're not seeing necessarily quick change in that space to kind of foment that growth yet. They want to spur that growth. I think the intentions are there. That hopefully they will get there, and I think the government's inclined to be able to be very pro investment and growth. And I think even in their targets, they initially stated that they wanted to reach 1 million barrels. They've kind of significantly come down from that. Obviously, it's a very ambitious target, let's say. But I think there's a lot of potential that you can see in Colombia, in Ecuador, in terms of undeveloped or underdeveloped assets, or assets that maybe given a different contractual scheme are very attractive. So and the government is kind of in a macroeconomic way, I think, are ready to kind of push that out. In Colombia, I think it's always been one of I would think historically a very easy country to kind of invest in, or easier than others in Latin America. It's a pro-business country. Obviously, it has its issues as of late with some of the protests that it's had over that last several years, I think. But at the end of the day, I think that'll continue. I think they have another round happening right now, that the NIH 2021, the Ronda 2021. They try to bring more investment. I think in general, the conditions in Colombia are always favorable for investments, and you see that happening. I think there, it's more about I think there's large potential, but obviously it's just it's a competition for the quality of assets that you see in other places, and that's always I think I see in Colombia. But at the end of the day, I think they set up the right conditions for investments. Obviously, there's always concerns, of what will happen if a changing government, et cetera. But from our own, intelligence and discussions with different players in the space, they think that things in this space will continue. They understand that this is a big, an important segment of the business for the government and for the country. They kind of steering it more of how do we develop the gas market to find more gas, because they're highly dependent on gas for power generation, and they will continue. So I think in general, both those countries are set up well to invest, and in some cases, I think Ecuador's kind of in this transition mode. Hopefully, they were able to succeed to navigate that transition to be able to succeed in bringing in more investment into the country.
Thank you, Andres. We have a question from Tomás Lanardone. Andres, what is your view of the lack of oil supply in the incoming years due to the reduction in capex by the majors? Do you really see oil prices in a record high, or the OPEC plus Brazil, Guyana, plus Iran, etc., will be sufficient to compensate reduction of volume by the majors?
Great question, loaded, but you know, I think that's part of, you know, where I started this a little bit, right? I think you see this high level of volatility, right? I mean, remember last year, this time of year, I mean, we were talking, well, a little bit less, but you know, April, May of last year, we were talking negative prices, you know. Now we're almost talking about almost 75 Brent, and it's just incredible how volatile it is, and it creates these uncertainties and for players that, you know, that or companies, right, that need to plan out to be able to replace reserves, etc. I think we're in a situation that, you know, we have this we're going to be this high-low situation all the time, very volatile in terms of prices, and it creates pressures, right? I mean, yeah, the majors are probably have this, you know, reduction in capex in terms of, I think they're really refocusing their capex. I would kind of change that statement, right? I think they're not necessarily, they may be reducing in terms of their exploration or some of their, you know, refocusing or recalibrating their capex spend on near development or that kind of focus to, you know, to their best assets, but not really focusing on reserve replacement or frontier or anything like that, or they're actually changing their investments into renewables, right? But the reality is, and part of what I try to explain is that, yeah, they're leaving that hole and they're leaving those assets, but most likely somebody else will come in and develop it, right? If the market is there and the price is holds up, you know, I think that still be somebody will still develop, and obviously there's these pressures in terms of on these companies, but the reality is IOCs, I think, account for what, something like 15%, 20% of all production in the world. So at the end of the day, you know, somebody else is going to come into, or majors, I mean, 15, 20% of all production. So somebody else will probably come in and produce it if there's a market out there. And you're seeing already, right? I mean, the impact of what happened over the last year and a half and the pressures on future investment or development really hit hard in certain markets. So you're already seeing this impact in Europe. You know, you're having, well, it impacts in Europe in terms of gas, but it impacts some in Brazil and Argentina in terms of LNG imports as well. You know, record LNG prices, record gas prices, record power prices. And these kind of pressures create, you know, like, well, it's going to be one of those things. It's do we continue on this path of renewables, or do we need to kind of tamper down some of the rhetoric and kind of like, okay, well, we need to transition, right? So we still need to invest in some of these kind of long-term assets or commodities to be able to mitigate some of the pressure that people are feeling in terms of their pockets, in terms of paying at the end of the day. So I think it's always going to be that's the billion or trillion dollar question, right? I think, you know, it's like how do we, it's quite volatile, and people are, you know, are seeing that, and this will have ramifications in terms of, should we, you know, refocus some of our attention, or is it attainable, some of the targets that we're putting into place, or do we need to kind of, you know, really adjust and see, you know, how to reach those targets? So hopefully I kind of answered that question. It's a many parts to that, right? But it's a great question.
Okay, we have the last question from Luis Arturo Arano. Politics in Latin America generate investment sensitivities in a way that can attract or reject investors in the medium and long-term view. The opportunities shown are in line with the country incentive plan for investors, or there are a sort of conflict between reservoir opportunity versus investing opportunities. Which countries have a better tax incentive plan to keep growing oil and gas activities?
Yeah, it's more like a fiscal regime type question, I think. and the reality, as that question alluded to, is, you know, I think governments or companies, or rather, companies are you know, are more sensitive to significant changes, I think, in terms of you know, fiscal changes, government politics, rather than, you know, other things, right? I think, for example, you know, and maybe you know, for example, Mexico is a great example, right? You saw that, you know, when over the early 2010s, et cetera, there's a big changes in terms of their contracts, and some players, you know, went in and then slowly went in, but then the majors were waiting to see, you know, if it was stable or not. And then when it was seen to be pretty stable, majors went in and got into Mexico, right? And they got into some of the deep water, some of the shallow water projects, et cetera. But then, you know, significant change happened again, and now it's unclear. So I think governments prefer to, you know, companies in general, even if it's, you know, they're obviously looking for fiscal regimes that are attractive, but they prefer stability, right? And I think that's what I was alluding to in Colombia. It's pretty, you know what you're getting into at the end of the day. You know that it's pretty clear. It's a very stable, you know, in terms of fiscal regime wise. You know what you're going to get into, et cetera. So it makes the complexity of a business decision less complex. So it's much easier to decide. In the case of, for example, Argentina, it's just when I mentioned, you know, yes, it's, you know, the potential is there, great assets. I think huge potential, a lot of markets that you could start getting into, like LNG or even, you know, people are talking about hydrogen, people talking about gas storage, et cetera. All those things are fantastic, and they're great projects that can be developed. But people have a sense that, you know, right now the government's putting this investment or this promotion or this fiscal regime in place to kind of attract investment. But what happens when, you know, in a couple of years when the government changes? You know, maybe people are waiting it out until that wait and see to see how things evolve over time. So I think the clear rules and just not changing over a period of time is much more attractive, even if the fiscal regime is not necessarily attractive. So I think, you know, in that sense, I think the countries, you know, yeah, for example, what's happening in Ecuador, again, sounds really attractive, what they're trying to do, et cetera, but it needs to happen. It needs to be stable over a period of time. And then people really will come into play and say, okay, well, you know what, my money there or my contracts and everything is stable, and I can feel comfortable enough to invest in this country. So I think it's a combination of all those things, and different companies have different risk tolerances to be able to define what is something that they're willing to delve into versus others, right?
Okay, well, that was the last question. Andres, thank you very much for your time, the presentation, sharing all this knowledge with us. It was really wonderful. The presentation will be available in our YouTube channel probably next week. And also the presentation itself is going to be shared by Andres, that will include some additional information regarding Wellington and his bio. And so, well, thanks everybody for being here. We invite you to join the chamber, and we see you in the next webinar or in the next event. Thank you very much.
Thank you, everybody. Thanks for attending. Thank you, Ariel, and thank you, Lucas.
Gracias, Andrés.
Hello.